Hi there. Hey, this is Sergio Sais with Real Estate Hedgehog. This is our fifth podcast. I'm so glad if you're able to join us. I'm here with my partner, Sam. Sam, how are you doing, buddy?
I'm doing great. Welcome everybody to episode number 5. As always, we're doing this ourselves, putting up our time and our efforts. So please do us a favor, hit that like, hit the subscribe button. That'll notify you with new stuff. You'll always see stuff from us. So hit that notification bell. And remember, we do have a newsletter and an email. You can contact us, realestatehedgehog@gmail.com.
Great. Thank you so much, Sam. Hey, it's been kind of a crazy several weeks now. Kind of all kinds of nuttiness is happening out there. You know that we have that inflation thing going. We've got this whole issue with the Ukraine and Russia. The stock market, we talked, I think, a little bit about the stock market in the past, but right now it's down into corrective action. Interest rates are going up. All kinds of crazy things are happening. So just to let you know that still we really believe that, kind of like that hedgehog who knows just that one thing, that really the best way to build wealth is through real estate. So we're going to be talking about, again, real estate today. And then we're also going to cover number 3 in our 7 rules of real estate. And we'll talk a little bit about that once we get to that. But for today, I want to talk about rents. And I had a very interesting conversation this past weekend, Sam. I attended a family party. A lot of folks there. Had such a great time. Anytime you've got not only your brothers, your sisters, your kids, and in our case, even our grandkids, great time. But I was talking to some of the guys about real estate, and we started talking about rent and whether, because that's the other thing, real estate, as everybody knows, has been going through the roof, but so have rents. Rents have been really going really high. However, and you tell me if you agree with this, Sam, I don't believe that rents are really keeping up with the increase in the value of properties. What do you think about that? Do you agree with that?
I agree with you 100%. I think the value of property has been abnormally accelerating high, meaning either it's due to inflation, people have been sitting on the sideline, now they're jumping into the market, a lot of emotional buyers, whatever the case may be, but the price of real estate is skyrocketing. Rents is still increasing as well, just not at the same pace. But recently, rents are beginning to increase at a faster pace. This last 5 to 6 months. We don't really know why. Maybe it's just catching up. But with inflation, people are making more money. They're demanding more money. You've heard about the Great Resignation, where people are just leaving their job because they can, meaning they have the money to spend and sustain themselves. It appears that landlords are beginning to understand that there is money out there, so they can increase rents, and there are people willing to take that increase on.
So, what's interesting about that, though, I agree with you that rents are going up. Obviously, they're going up because landlords are willing. And yet, there are a lot of people, a lot of real estate owners, investors that own investment property that are, just for the lack of a better term, but I'm just going to call it like I see it, afraid to raise rents.
Okay. Oh, I know that very well, because that was me.
Okay.
I can tell you that was me. In fact, I even did something that is considered sacrilegious in the investment world.
Okay,
let's hear it. Rents without having to do so because I was afraid.
Okay. And what's the fear? What were you afraid of?
So here's my fear. As a new investor back then, I can tell you about the first true rental property I had. My mortgage was about $2,400 a month. My rents were $2,200 a month. Now, I probably could have gotten $2,400 to $2,600 a month based on the area's rent. Just given the context, it was 2,700 square feet, 4-bedroom, 3-bathroom, 3-car garage, 8,000 square foot lot, late 90s build, really nice house.
Okay.
But I was scared of not having it rented. I was scared of getting it vacant and I was scared of the turnover. So I decided to rent it $200 to $400 below market in order to make sure I have a renter. It worked out in the sense that I did get a renter right away, and they were a long-term renter, in fact, for about 10 plus years. But during the housing bubble burst, or the last big crash, somewhere around 2009, 2010, after several years of them living there and renting, these tenants, they had only asked, just timidly asked me, hey, what do I think about possibly decreasing the rent because the economy is going down? And you know what? My fear, my unsubstantiated fear that these guys would pick up and move, I decided to say, okay, I'll drop it $200 more. So now I'm taking a $400 loss per month on this property, right? And in my head, I thought to myself, well, I consider that like a car payment. I'm paying $400 on a house that's worth a whole lot more, and they're paying down the mortgage. But the reality is I didn't need to drop the rent. In fact, I could have increased the rent, because here is what a lot of fearful landlords don't consider. It costs a lot for somebody to up and move.
Yeah.
It does. It takes a lot for them to pack up, move, displace their family, displace the community in which they're living in. So that's one. Two, if the area commands a certain number on average, which we can find out through either contacting other landlords, property management companies, or just rental meter, looking up on Google for advertisements, why would you go substantially lower? Because what that tells you then is that there are places that are renting higher and maybe slightly lower, but the median is what it is. That's the average. You should always be at the average, as close as possible, even above if you can. If your place deems it based on its condition, stay there, because people know that if they've got a good place to live, it's going to cost them so much money for a deposit to go to the next place, which a lot of people who are renters generally don't have the money for the deposit. And if you don't know, some places they charge 2 months worth of rent at the deposit plus the first and last month's rent for move-in. So that's 4 times the rent, right? So these are the things that a young, fearful new landlord often don't consider. And that was me.
Yeah, I agree with 100%. In fact, with the guys that I was talking about, one of the gentlemen has a beautiful condo down in the Glendale area. At this place called the Americana. I don't know if you're familiar with it.
Oh yeah, very nice place.
Yeah, but one of those mixed use things where they have all kinds of business, and it's just very beautiful. And he rents his condo for $4,000 a month. He should be getting $4,800. The median, like you said, the average rent is $4,800. But he's comfortable. He's actually a little bit on the plus side, but like what I explained to him, number one, you make a very valid point. Where are people going to go? Unless you're going to really move far away, all the other rents in the area are going to be either what you're charging or even more, right? But here's the second thing that sometimes people don't think about, and I know that you and I have run into, and that's that when you don't keep your rents up with the market, the day that you decide you want to sell, investors aren't coming in to say, oh, wow, look at Sam. He was such a good guy. He kept his rents low. He did well by his tenants. And I'm going to argue later on that you didn't do well by your tenants by not raising your rents. But the investors are going to say, oh, man, this is a business. It's not generating the cash flow it needs to generate as a business. And therefore, in order for me to get those rents up to where they should be, might take 2, 3, 4 years, number one, assuming that, and even then, I don't think you can catch up with it, because unless rents take a downturn, which they could, but generally that doesn't happen, the average is going to still keep climbing, just based on a little bit of inflation. Doesn't have to be that high, but if cost of living is going up 2, 3%, and you're, $700, $800 below the average, you'll never catch up. And then when you try to sell it, the businessman is going to say no. And you know what? I know that you and I have said no to properties like that. I know I have, because I'm thinking, but I'll never catch it up to where I need it to be. I'll be losing money continuously because of the price of the property. So that's another issue that people have to consider. So I know that you've had those type of situations, right? Where you
Oh
look
yeah.
at
So
properties.
let me give you an example.
Yeah.
So if people who are not in the landlord game may not see it this way. In fact, renters know this, but a lot of personal homeowners probably don't think about this. A lot of would-be investors never see this, and that is that our society in America is shifting. It's shifting into more government overreach. And I want to use that term kind of loosely in the sense that people are demanding, or let me rephrase that, voters, the voting base are demanding more government control over things like cost of living, in this sense, housing. So therefore, a lot of places have what's considered rent control. And I can tell you, as of a few years ago, California enacted a statewide rent control. Now, there had been isolated pockets of rent controls in certain areas like Los Angeles, Brentwood, Santa Monica, but now there's a statewide rent control. And the way the statewide rent control works, and we're not the only state, there's other states that have done this recently in this last decade as well, is that they have a state mandate or cap on how much you can raise the rent, but they defer back to the specific municipality if they want to be more strict. So now let's go back as a landlord. If you start off with very low rents or under market rents, if you will, and you decide that either based on fear or based on altruism or whatever it is, you're going to keep the rents low for stability, and because you felt that you're already making a few bucks. A year goes by, 2 years go by, not taking into consideration what rent control rules are. Oftentimes the caps are anywhere between 5 to 10% per year. And the cost of living rises, like this last year, almost 7% over the year 2021. You will never be able to raise your rent fast enough to keep pace with the average. And then when the time comes that you do want to do it, here's what you got to think about. Let's just say, as a small example, your rents are $1,000. And let's just say the area is $1,500. The area is median, but you are making money even at $1,000. But over the course of time, the area's median had raised up to $2,000. And you just realize that your living expenses or your operating expenses have crept up, because everything creeps up.
Yeah.
And now you need to make a profit again, because all of a sudden you got reassessing your taxes because things around you have sold, and it just impacted you financially. Well, had you kept the rents up year by year, tenant by tenant, it's easier for a person to swallow a $50 to $100 a month increase than it is for a person to swallow a $500 to $1,000 increase right away. And taking that into consideration, you'll never catch up on the increases.
Right.
And finally, like you mentioned, when the time comes to exit and sell the property oftentimes, unless someone intends to occupy it, it is valued by what income it generates. And I can tell you the tactic I've used is to force the landlord to raise rents before I even close escrow. Now, think about it. If you were that landlord and you haven't raised rents in years, and you did that, for one, it's very uncomfortable. For two, if it's so low and they ask you to increase it quite a bit, you know your tenants are likely gonna, revolt, move out, whatever the case may be. Yeah.
They're going to rebel. Yeah.
Oh,
No,
yeah.
I agree. And so you're absolutely right. I mean, you're just, you're emphasizing that which I had just stated. And here's the third reason why I think you need to raise rents. Okay. So basically, we've been talking about two things right now. We talked about the fact that, you want to make sure that you're staying, that people are not going to move out, generally speaking. Yeah, sometimes they will. You have a little bit of problem with that. No big deal. But the vast majority of people, if you increase rents by 3%, 5%, even 7% probably will not move out. We talked about that. Number two, we talked about how you got to keep up the value of the rents so that, what was the point? I already forgot.
So that when the exit
yeah.
plan comes in,
So your
it's a
exit plan,
valuable asset. Yeah.
But here's the third one, and that has to do with the tenants themselves. Because yes, we're in the business of renting property and we want to make money, but you also have tenants, and you have to consider the tenants. You have to take care of the tenants. You have to maintain a property that's clean, that's safe, that's even healthy for them. And if you're below market rate, your chances of putting money back into the property are way, way less. You know, if you're at best breaking even, let alone taking a loss, really think about it. I mean, let's be honest. How much are we going to want to put money into it? More money out of our pocket? Probably not a whole lot. But if you've got, you know, a $600, $800, $1,200 a month profit, and even more, and I'm talking like per property maybe, you know, but really the bigger the properties, meaning the more units, you know, if you have a 20 unit apartment and you're just making a $50 positive on each unit, that's $1,000 easily. That's $12,000 a year. When it comes time to fix something, to repair something, to upgrade something for the benefit of the tenants, you're going to be more willing to invest that money because you've got cash flow, you know. So
no, I agree. So that comes back to another important part of having to raise rents, is because you want to make sure that your reserves are covered, right? You got to have reserves because you never know when things come up. You got to make sure you have enough money for your capital expenditures that you project year over year. And although you're not doing this all the time, but when it comes time to re-roof the property, let's say it costs you $50,000 every 20 to 30 years, you have to divide that out and segregate those costs, and it all adds up. You know, these things, they don't last forever. There's wood rot, there's, you know, new shingles, new siding, new eaves, new paint. These are the things that a new investor may not be taking into account because they bought a property that was spruced up during the sale and they think that this is what it's going to look like 5-10 years from now. But tenants, do not count on your tenants to maintain and keep up your property. That's your job.
Exactly, 100%. Okay, so we talked about 3 real good reasons for keeping your rents up, increasing your rents, either because leases are up or tenants leave and you get new ones come in. I say if you can raise the rents, raise them at least to market level, because that will really put you in a position of strength. So absolutely. So for those of you folks out there that own an investment property, that are renting that property out, increase the rents when it's the appropriate time. Don't be afraid, don't be shy, don't be scared. And if you're scared, do it anyways, because once you've done it a couple of times, you won't be scared anymore. So,
I agree 100%.
Okay, so for just before closing out, I want to talk a little bit about our 7 rules of real estate. I'm just going to go over them real quickly, and we're going to talk about the third one. So remember, we talked about making money at the buy, adding value to property. And today, the third one is, and I think we are on number 3, is to make offers, lots of them. Can I just say, both Sam and I, we try to make as many offers as we can, but it's getting harder to make offers right now. And there are very specific reasons. Just real quickly, Sam, touch on some of the reasons why we're finding that, man, we'd like to make offers, but sometimes there's no offers to be made. Why is that happening?
Well, you know, I think part of it is that there may be a lot of people who've been sitting on the sidelines because, you know, we've had the stimulus, we've had a lot of things going on. Wages have gone up over the years, so people are making money. And here's my personal take. Every generation comes kind of a cycle. So right now, those millennials are moving into their 30s. They're at that prime home buying age. They make good money. They're very technologically savvy. They're now starting to have families. So they're moving out of that apartment living in downtown and they want a home. So because of that, they are saturating the market with offers. And the biggest part about offers and trying to make them is because right now there is a a lack of inventory for one. And those things that do come on the market, they fly off the table because people are making offers oftentimes out of emotion. So they're willing to go over the asking price. And, you know, to kind of quote some of the things that young folks say, they call it FOMO, a fear of missing out, right? Yeah. So they're fearing that they're going to miss out on this opportunity because they're seeing the interest rates are really low. Their parents are telling them, oh man, you know, this is the lowest interest rate ever in history. So now they're coming in and they're snatching up these properties that an investor would reasonably think, no way, this does not make sense. It should be at or below this asking price. But sellers at the same time are taking advantage of this opportunity. So in order to get yourself in the market, make offers. You're not an emotional buyer, but here's a tactic as an investor. Sometimes you just need to make that offer just to get it. The first day it comes out, if you think it even has a chance, just lock it up into a contract. You still have your due diligence period to change your mind, but at least you got the property under contract, and you can always negotiate later. But if you are too stuck on a certain price and it is really pretty close to your price range, and you know that the market is hot like right now, and you try to not overbid, then you may lose out. So I would consider that as a tactic. If you think that it has a chance to, a little room to wiggle to get to be profitable, make that offer, make as many as you can, lock it into contract, and negotiate later. Now that doesn't apply to the really, you know, outrageous costing properties by any means.
Mm-hmm. Yeah. And I would also just say that if you haven't done what Sam is talking about right now, just be very careful. You may want to talk to someone that has done this type of, used this type of tactic, because there are certain consequences to locking in at a price and then making sure that you have some sort of escape clause. And there's several escape clauses you can have in there that'll let you pull out so you don't lose your earnest money. And that's always a risk.
No, good disclaimer. I'm glad you brought that up. I mean, yeah. I should have brought that up, but you're right. If you haven't done it before, study it well, talk to some people about it, read that contract.
Absolutely. Excellent, excellent, excellent. So that closes us out. Go out there, make lots of offers, folks, raise the rents. And hold on, I've got Prince Harry the Hedgehog here, who says, you know what, Serge, you know what, Sam, there's really only one way to build wealth that we know of anyways, and that's through real estate. So get out there and do that, guys. Get a hold of us if you have any questions. We have an email. Sam, give out that email and tell them what they have to do right now.
Hey guys, hit that like button, hit the subscribe button, hit the notification bell so that every time we come up with a new video, usually once a week on Thursdays, a new video will come out, you'll get notified. And if you want to contact us, RealEstateHedgehog@gmail.com. We'll answer any questions. We check it on a regular basis. Let us know. Also, if you think that you want to hear about something that you're unsure of, send us an email. We'll check it. We'll make it a topic for the next discussion.
Also, we have our comments open.
Yeah, so I'll start opening up the comments for people with this video. So there'll be public commenting. That way people can kind of critique and communicate and give their opinions based on their experiences directly. When you're opening up that video, you'll see it at the bottom.
All right. Thank you very much, Sam. Thank you, everybody. We'll see you guys next week. Have a wonderful week. Take care.
All right, guys. Take care.